What is the adjustment that is needed from these equity markets to the higher rate scenario that's coming through from the ECB? Have equity markets properly adjusted to this new reality?
Well, what's been so interesting about the European market reaction is actually a lot of the move has come in terms of nominal yields and not so much real yields. So a lot of it is inflation compensations rising. And so that's not necessarily super negative for European equities. So until we see the real yield picture start to change, European equities can maybe hang in there.
We've seen the real yield picture change here. At least that's what Jerome Powell points to when he says financial conditions has tightened. Of course, the rest of the Wall Street is like, what? Financial conditions are really very loose by our measures. What do you think of the Fed's path to beating inflation, and are they going to have similar problems?
Well, what's really key to me about the Fed at this juncture is that they're committed to sticking with 25 basis point hikes. And that's a huge shift from last year when they were going in 50 and 75 basis point increments. So if you see a little bit of a reacceleration in activity here, even if you're still of the view that a recession's coming in the second half of the year, which we are, if the Fed is not going to lean against that acceleration in activity, that can, I think, help risk stay supported for the next little while here. Very different story in the second half if we see the growth environment start to turn negative. But for right now, we can be a little more constructive in the risk environment.